Hi everyone, in today's video we're going to compare two companies, Wunang Net Technology with market cap over 1.5 billion and NXT-ID with less than 20 million. So we start with the Wunang Net Technology. The company offers online retail of food productions in China. And for information should not consider as investment advice. The company's revenue grew by almost 90% over the past year. Risks has less than 1 year of cash runaway. Shares are highly illiquid, so that's kind of risky. Less than 3 years of financial data available, and they actually start IPO a few days ago, as you can see, 14th of December, and from that it already passed the 50 mark, and currently it's 65, and so it's 400 over 400%. So market performance, there's no data of it. I think it could be beating the industries and market average. Currently there's information data because of it's not so long on the market. Future growth, there's no forecasting for the company, but on a retail industry is over 35% annually. So let's have a look at the past performance. Minus 90% earnings growth. And financial health side, we see here's the bad side. I think this quite not good, because the good thing is the company is debt free, but it has negative shareholder equity, which is pretty risky, and they are not paying dividends, and there was no insider trading so far. I think that's there's influential data of it, and also I think there's not so recent data on the top shareholders. But as you can see, the breakdown is private companies less than 30%, and individuals, insiders, more than 70%. And simple safe dividends, we see here the shares outstanding was increased, total sales are increasing, and also sales growth is pretty good. Anyway, the investing.com summarizing the stock for long-term investors as a neutral, but technical indicators say it's a buy. I would consider not to buy yet, and for beginners, not to buying stuff with like recently IPO'd. And the second company, NXT-ID, provides the technology products and services for healthcare applications. Market cap 17 million. The was trading at that's a good news, 20% below the site's estimated fair valuation, and company earnings have grown over 40% per year over the past 5 years. There's also risks. Highly volatile share price over the past 3 months. Shareholders have been diluted in the past year, and also do not have a meaningful market cap of 70%. But you see, like a few days ago, as a previous company that we compared pumped up, and you will be profit almost 100% of it. Anyway, 1 year return over 80%. Of course, beats the industry in the market. And by the way, long-term price volatility is less than industries and average market volatility. Valuation, this is good news, very good news. Currently it's undervalued about 20%, but on investing.com. So we see here current price 1.22. So it's already overvaluated, and if it goes under the line, there could be some buying possibilities. But anyway, let's take a look. There's not forecasted future growth to the company, but there's forecasting to the industry of software over 12% annually. Past performance 33%, which is good. Financial side, we see that debt to equity ratio is over 100%. It's actually 118%. So there's kind of rally. So the equity was at the moment 2 years ago and last year above the depth level, but it decreased, and level of depth didn't decrease as fast. Currently they're not paying dividends, and on the insider trading side, so we see here no volume, so it's a good sign. Top shareholders, I see pretty much green here because for example, biggest addition was Renaissance Technologies Corporation and Northern Trust Global Investment, which is pretty good. Simple Safe dividends, we see here shares outstanding is increasing all the time every year, which is not so good, but for the expenses so this is okay, but not in the long term if the total sales are growing. But here we see last 12 months was decreased. I think that's for the COVID. But anyway, investing.com showing the stock for long-term investors, same as the previous, neutral, and technical indicators buy. And some of the commentators buy on the big volume, and actually the price went up a little bit. I would consider as a whole, and it could be possibly going up, but there's also possibility that it could go down as the same way. And if you, for example, you see the maximum, so the price was previously in the year 2014 at its peak 59.40, and it went down, so it could possibly go somewhere near those numbers, or could possibly go down like to the level of 1.40 or something. Anyway, thanks for watching this video. Subscribe to the channel, like the video, and see you in a future one.